All right, let's get market reaction to all of this. Jonas Ferris is the MaxFunds.com co-founder and Fox Business contributor. He joins us now. Jonas, the Wall Street Journal reported the easing of some of the tariffs. It moved the markets, even though the White House denied it, and then went on to say, and this is a quote, the talks are nowhere near completion. So why are stocks up?
Well, first of all, it was a brief pop. I think it was late in the 2 o'clock hour yesterday, if I recall. There's a lot of because more news could have come out. So investors who might have been short or wanted to take on positions right before in case they wanted to get ahead of a story that was an actual thing and not just a rumor that wasn't going to go anywhere. It's possible this story is coming out because the shutdown is getting kind of negative now, and we need something positive, and to have the overhang of a tariff trade war that's escalating soon and a government shutdown it's not great for the markets. Although right now, again, the markets have been rock solid since the shutdown started, which is kind of surprising in itself. Yeah,
there's a lot of overhangs and dark clouds for the market. It's all poor visibility. So, it begs the question: what do investors do when they're looking at all these issues? It seems like investors are buying. What do you make of that?
Yeah, because I don't think the tariff war this whole way so far or the shutdown are reasons not to own stocks. Reasons not to own stocks are recessions coming, global recession, credit problems, earnings problems, growth problems at tech companies. Those are all legitimate reasons that the market could go a lot lower. These are not long-term problems that would affect corporate earnings for long periods of time.
I want to talk about recession. UBS is saying the UK could go into a recession in 2020 if there's no orderly break from the European Union, if there is the hard Brexit. At the same time, the Conference Board, Jonas, they're out with a survey of CEOs, and the biggest risk for these CEOs this year is recession. Do you think we should be worried about a U.S. or a global recession?
I think there's a pretty high risk of a global recession. I still think the U.S. could avoid it with just kind of a slower economy. We're pretty strong right now, a very favorable environment compared to other countries. I mean, Brett, they voted for a recession in the UK when they voted for this Brexit a few years ago. And you know what? The good news is their economy is smaller than California now. I know they've got delusions of grandeur and think that they're very important still on the world stage. They're just not, and they will have a very hard time. But that country by itself cannot cause. They could be panics. There could be credit market problems. The banks over there could have problems.
Right.
But it's not like a China or a Japan or even in India. It's just not.
But some folks, Jonas, are saying you can see then the breakup of the EU entirely if more countries go the way of Great Britain, and that is a worry for many
investors. Not if
investors.
it goes badly. I think if it goes well, which it won't, then other countries will. But if they're current, I think the pound's going to parity against the dollar, which is amazing because it was two about a few years ago in 2007.
Oh, I remember. I was there.
Yeah, so it's going to be a great travel destination if you don't get stopped at the borders because it's basically becoming their own island again.
Jonas, I like how you think. Thank you for coming on with us this morning.
Thanks.
Have a good weekend.